The following is a station of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Friday morning, TGIF. Thank God it's Friday. And it's been a crazy week. Last week and this week combined, I'm looking at the S&Ps, and no mystery to anybody, we bounced off that 1970 area, reached a low last week, 73, and 1973 that is, and now we're trading 2087.50 pre-market. Let's see where we're at pre-market, 2087.50. And we talked yesterday about 2071.72 weekly unfair highs. Recent unfair highs on this contract have been 2088.75. We've reached a high of 2089.75, so we satisfied getting above the most recent highs here. And let's just kind of review a little bit on the 240s, this 71 area that we talked about yesterday getting above. That was yesterday morning, or actually we were a little bit higher than that. That was yesterday morning. That was to be the first support, and then big support was at 2052, 2053. This thing hasn't looked back, and I think the thing we were trying to impress upon everybody this past week, even with the pullback below 2052, 2053, that, as we look, and I hate to bore you guys to death with this, but as we look at this guidance tool, if you will, with the S&Ps, and I'm going to kind of just show the Shanghai here as it readjusts. These are, this is a great tool to give you some heads up on how the internals of the market are doing, and the internals of the market were basically telling us that it was not okay to short some of these inflection points. We didn't even get any intermediate signs that it was failing as far as some of the moves up. And when we had that move up, we retested 2052, 2053. If you watch this show, I've said that a couple of million times already, and I apologize. But fact of the matter is we were trying to block out one side of the marketplace, which was the short side. And now what do? So now we've come up and reached for the sky here and gotten above some recent unfair highs. And the Dow, I believe, I haven't looked at the Dow. I don't really look at the Dow that much. It's 30 stocks, and it's not a good statistical sample, in my opinion, to gauge the whole marketplace. I don't. It's kind of weird. But as we look at this, the question always is, what do we do now? We were looking at, just to kind of go through a discourse here, our navigator was just going right into the zero line. And the reason we had kind of looked at this with some suspect eyes about moving up back in January is because we had lower highs on navigator, higher highs on price action, and that did cause some pullbacks. But if you step way back and look at this, we talked about this kind of coming into a point, a consolidation area, and then when our breadth started actually ratcheting up again, especially near these inflection points at the top and not wanting to back off, the leverage has been to the long side for the long-term investor, without question. And we were just looking for situations to try to buy, a lot higher percentage chance of being right than being wrong relative to shorting this thing. So that's what's happened. And again, the question is, what do you do now? Here's the 240s. We usually, when I look at daily timeframes, weekly timeframes, and again, that 2071.50 is going to be a very powerful number. We always kind of go down into lower timeframes and allow profiles to kind of regulate that side of the trade up. And if you look at this, as soon as we started from the depths down here, the 240s have kind of regulated this up. We don't have any new profiles appearing up here. I'm not a big fan of just buying things blindly, throwing darts at a board up here. So now we're kind of overextended. That 2071 is the big number down here. And if we have any volatility up here at all, we're more than likely going to have a new supply area happen on our 240s, and that'll give us maybe some new inflection points to pay attention to. And by the way, if you got the scanner, you can pretty much map this out. I promised you guys this. We had a couple of little programming issues here. Here's our 60s with the inflection points here, 2083, 2089 up top. But you can get all these inflection points that I always talk about with the charts right here in the scanner at a super neat deal. But I promised you guys paragraphs with explanatory statements as you mouse over the stocks, and then an actual bar chart with the levels on it. This weekend, I'm going to beat somebody to death that they don't have that done by this weekend. But sorry for the delay. I think it's going to be a great thing when it comes out, and thanks for your patience and waiting. So that's the situation on the S&Ps. I think that's what we have to talk about. We got a lot of stocks to talk about today. Some oil stocks again, some of the stocks in the news, the Ciscos, the Teslas of the world, the American Expresses of the world, some of the dogs that have been falling, the Groupons, the not Panera Bread, Crafts, some of those household stocks that are in the S&P 500. We're going to try to talk about some rescue situations. If somebody happens to be in those stocks long, what do you do now if you stayed into those through some earnings announcements and they haven't worked out well? We're going to take a look at some of the usual suspects before we go to break, and then we're going to get into some of those stocks. But as we look at the dollar, obviously this thing, had a pullback, and we talked about as we had broken down with below some 240 profiles, kind of allowing that to be the Maginot line and possibly re-entering later. I still don't think you have huge leverage on this yet. I mean, we talked about putting some trailing stops in after we had bounced off of 93.67. There's some decent news out of Europe, the German news, and the European economies. And again, I don't try to get too involved with this. But from a technical standpoint, but the Greek thing is kind of like, in my opinion, that's just a trading opportunity off that news. It doesn't mean a lot to me, but the Greek situation is to some degree coming into some normalcy state. But as we look at this, we talked about putting some trailing stops in as this thing had moved up from 93.67. We're still above profiles on the daily, and on the weekly, you still got a target up there at 95.85, if you can see that, because we had a new profile appear this week. That's new long-term supply that was pretty much guaranteed by that orange bar right there on our charts, and that was actually indicated in the scanner also. So as I go into dollar index futures on the scanner, I see that 95.85 is sitting right there, and then we're green. And just going through some of the basics. And let me see if I can get this out of our way. Okay. So what do you do now? Obviously the long-term leverage is still with the longs. Stops need to be oriented below 93.67, but on a short-term basis, you do have some trading opportunities. 94.53 up top on the dollar, 94.08, down below. And again, I think this is a buy the dip situation still. Until we're told differently, until we have any technical damage on the longer term or intermediate term. That's just the way I'm looking at it. And even with all this crazy developing news, the euro's sold off again. And as you can see, this is kind of one of the things I wanted to bring up today. These things are still in a long-term downtrend, and we talked about picking these currencies against the dollar, and this Maginot line here, you hope that that the market will come into some of these inflection points. 114.47, we reached a high this morning of 114.43. So 4 ticks off, and then we sold off, and we're selling off 60, 70 ticks since that event. And that is, with all the good news and the Greek settlement and blah, 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 that's pretty damning for the longs. We talk always about these profiles and letting this regulate the trade down, and just being patient until some of these major areas of high probability battle points are, and that 144.47 was reached almost to the tick there. And if that doesn't work, just like it didn't work this was a stop out situation. We always talk about lose a little, make a lot. And the leverage being on the short side is get back in the trade when we breach those inflection points on the downside. These are also in the scanner. And if this doesn't work and we get close above, sit on the sidelines, and we keep gravitating north, the leverage in this type of scenario is still on the short side, and you can pick another battle around 116.80 up top. So this one, going into our currencies, just to proof of concept here, those are the levels that we talked about, 116.79, 144.47 down below. And here's the real neat little thing going on here. Okay, so there's the 114.47 right there. And new box attempting to appear in the 240s for you short-term guys. I generally look at, let me see if I can, heck on it. Let's see. Can I get this? Okay, there it goes. I generally look at things from a little bit more of an intermediate inflection point stance, and the very short-term stance is something I kind of leave out of the equation a lot of times. So just letting you know where I'm coming from. 112.45 this week was hit. This profile appeared this week, and that was the new demand area on the euro, and the bottom 112.45, and we reached a low this week of 112.70. So very close to that, and this is possibly going to be the range between 114.47 and 112.45 right now for the euro. The yen, we want to talk about this because, I actually have interjected some fundamental thoughts in the yen, and we talked about the Bank of Japan staying on since we broke out around or leveraged around that 101.33 area a long time ago, 2,000 ticks ago. From the short side or from the long side, we talked about not stepping in the way of this. We did reach some targets that we talked about at 120.42, and we backed off of there. And some of the fundamental thoughts right now is the Bank of Japan saying, they're not going to. What was the statement? They're going to. I think cooling on the idea of stimulus, but I wouldn't, and this is very recent comments. I wouldn't, this is a slight pullback from basically all-time highs and a major inflection point up top on the yen. I still think the leverage is towards the long side on this product. And as you can see, we caught some great trades around 116.67 into those 119.55 areas, and we overshot it and we pulled back. But again, that's 300 ticks there in a matter of a couple of days. And what do we do now with it? We'll talk about that when we get back. And I think we're going to bring in Juan from South America.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were finishing up with the yen, but I wanted to see if Juan from down in South America is with us right now. Juan, are you there?
Yes, I'm here.
Hey, buddy, how are you?
Great. Doing great.
What's going on, man? I know you're looking at a million things just like I am.
You know, I'm starting to like the energy complex.
I hear you.
Yeah, XLE.
Let's get right into that.
X-ray Lima Echo, and take a look at solar. TAN Tango Alpha November.
Tango Alpha November. Okay.
That started run last week. We called that move, and is getting hot again. The solar complex is getting there. The FSLRs, the Solar City, the company from Elon Musk is also doing a lot of deals, and there's a lot of things happening in that complex.
Good. Well, I tell you what, I've got TAN on the screen, and as we see this, you know, this thing obviously broke out closed above profiles once back in late January, and then it did it again above 34.39 here, but it's on the way up. Like, if somebody is looking at this and now got it on their radar screen, what do we do to the right of this situation? Do
not chase this thing. This thing started when it broke the box. Mm-hmm. We are just waiting here for new set of boxes, and then understand who's controlling the auction, and then buy the dips. Right. Buy the dips.
That was my thoughts, was wait for another profile to possibly appear, and then just kind of look for the new support areas is always a decent thing to do. FSLR, is that another one? Yeah, for solar.
Yeah, for solar, and Solar City is SCTY.
Right, I've got FSLR up right now. Oh man, I like this. Yeah, this is starting to show some green shoots here finally.
Yeah.
as they say.
And if you go to the weekly and the monthly, the whole sector is on fire, really.
Right. Gotcha. Well, the good news is, we know what our orient stops if we're wrong on these types of trades based on the so-called levels, So
Right.
it's an intermediate stop or a long-term stop, and that's, I know me and you are on the same page with that. Can we look at a couple of things together?
Sure.
Tesla. I'm going to put this on the screen because a lot of there's obviously a lot of fundamental news out there. A lot of people are in this stock, and we talked actually on this show. We talked about the weekly support on this 193.70 that seemingly has held even with the big, Musk statements lately. I like that guy. I don't know if I haven't actually talked to you about him, but he's got a good track record. He's a forward-thinking guy, and I don't think he really cares too much about opinions right now. But technically speaking, what's your thoughts on this one?
Yeah, we have a damage on the if it's straight. That's the weekly.
That was the weekly. I'm pulling up the daily now, but there's I'm just your general thoughts on this stock and how to deal with it.
I'll buy the dips. I think the stock is the fundamentals are pretty strong in that industry, but then he's going to face some headwinds when the major auto manufacturers start doing their solar thing, and their energy play with, electric cars. BMW is coming with a very strong car. And he's going to face a lot of competition that he doesn't have right now. He still has the first mover advantage right now, but in the coming years, he has a lot of challenges with this company. I don't know how he does running, a solar company, a car company, and a space company. He's huge. He's awesome, but technically speaking,
good.
I'll be buying dips, understanding that the fundamental picture in the long term has its challenges.
Right. I'm in full agreement with you there. 193.70 should stop. I mean, that's where I'm going to kind of look at Orient and stops below there with a little bit of noise factor, and continuing to look at this, from trying to find some of the ripe areas to buy this. Obviously, it's not been technically the best situation over the last since last fall. Relative to the S&Ps, there have been better opportunities to buy things, and we've talked about that you don't want to, this hasn't been on sale as some of these other stocks on a relative strength scale have been climbing with the S&Ps, but right now with the news announcements that have been relatively fundamentally bearish, the stock held up relatively well, and I think you've got some chances to get on the bid here a little bit.
Yeah, it's one of those companies that you have to start, you have to continue watch. Right, because something's going to happen with that.
Can you hang around? I've got to go to break here. Yeah, cool, great. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I've got Juan Villegas from South America on with us, and he does a lot of business all over the world, but that's where he's generally located. Juan, are you still there?
Yes, I'm here.
Hey, I've got crude oil up right now. I know you got a little bit of a delay probably watching the show on the site, but you know, what's your general feelings on this, the XLE, the oil stocks? We talked about it a little bit, but what do you, I mean, as far as volatility goes, what do you think the climate's going to be? And do you think the leverage is towards the long side or to the short side, or are we just going to be range bound for a while?
Yeah, all of them. All of them.
Well,
yeah,
see if you,
But now going short right now is a little bit, kind of, kind of difficult for me to short this thing right here.
Right.
But if it breaks below 48, it'll go 45. But then I think we are finding a bottom. I see the algorithm there predicting, favoring longs right now.
Right.
And I'll be buying this, but understanding that in the weekly, this is a bear market rally.
Correct. Yeah, well, go ahead. I've got the weekly up now. We started actually having some new demand areas on the weekly, and we kind of started getting our head a little bit above profiles here for the first time since 100 on my screen. So I'm listening to you, and it's what I was going to say, and I think you summed it up with, you agree with everything that, we were talking about earlier. There's a lot of people betting on either side of this equation right now. You've got a lot of hedge funds, as we talked about this past week, actually, that are piling into,
the short side.
Late in the game as usual. Yeah, with the momentum trade on the downside. Now that the pattern's evident that everybody can see on the earth from a technical analysis standpoint, then they start coming out with, oh my God, they're going to really get short down into 30. And that's a great sign.
That's not the picture that we're seeing right now.
Exactly. So, but what do they know? They know how to raise a bunch of money and have people sign off on certain things that they can do trading wise in an over leveraged fashion most of the time. But the problem is right now, there's some big bets being placed on the short side for the shorts. We could just see any type of global disturbance that either is manufactured fundamentally or non-manufactured fundamentally have this thing sky up. But at the same time, because there's this is kind of the flavor of the day now, and there's a battle out in the news on this thing, whether this thing's going to go lower or actually short squeeze higher or whatever. There's going to be a lot of volatility, as Juan said.
Yeah. No way. Yeah. Fundamentally speaking, we have excess of production in the world. Mm-hmm. That's evident, of course. But yes, technically speaking, and quantitative analysis that we do with the tools and all that, it says watch out if you're doing shorts. It's time to close your short position and probably go long. For how long? I don't know. That's why we have those boxes to let us know when we need to switch our bias to the short side or to the long side, just by reading who's controlling the auction. And the only thing that I see right now is a potential, going to probably what's that number? 60?
Yeah, up in
68.
Up in
60,
that area.
62.
Yeah, up in there.
Yeah. That's a possibility.
Right. We talked, yesterday, about not even messing with this until we get back above 51. The move was really violent and nice. That we had talked about the risk is to be short still. This was 2 weeks ago, and then we had that pop, and then we've had some pullback to support areas with a little bit of noise. Crude oil's got a lot of noise to it, and it's been by the support, and by the breakouts. And we talked about doing nothing down there the other day, and people missed some points. But as we kind of closed above and retested these inflection points, it's a very positive sign for longs, and we're also above that 51.50 on the weekly. So
and look at the navigator. Look at the trend in the navigator. The trend is up in navigator. It's going up.
That was one of the things we were looking at this with suspect eyes on the short side, is because we had higher lows on navigator and lower lows on price action. Then the way I know you haven't been watching the show every day, but the way we have been trying to play oil was from a relative strength standpoint with the XLE, because the XLE kind of started showing its hand a little early. Now, that 80 area on the XLE was the big area to get through. We had a new profile appear yesterday. I'm not a big fan of shorting the XLE. Obviously, you guys have been watching the show and you know that. But Juan, have you been looking at any individual stocks in the XLE? Because if not, we can just pull up some out of the scanner here.
No, not in particular.
Okay.
Just the whole sector on the ETF.
Right. So what guys you can do at home, if you want to, is get a trial of this thing and start looking at some of the inflection points to pay attention to, possibly as the sector may move higher in general, and it will have some volatility, which means trading opportunities and battle points that you can actually pick based around some of these inflection points that this thing will give you. Now, I've just got up the whole sector of the XLE right now, but you can come in here and add up to 2,500 instruments in here to find trading opportunities. And also now with the admin version that you guys can get on TFNN network, you've got a chance to look at 12 different breadths to trade indices globally. And one, we've actually got the Bovespa, Coal Cap, and Inmex in here now. So it's kind of a two things in one type product. All right, so let's do this. I want to go back to something that's on a lot of people's radar screen, obviously. I've I've been really bullish on treasuries since the genesis of this show, actually. And people have heard that. We have had some technical breakdowns on that. This is the 10-year. We've had some technical breakdowns on the 10-year on an intermediate basis, first time in a while, and we've also had the long-term weekly view, which I'm showing right now, pull back into that 127.27 area and kind of bounce off of it. The rate environment, I mean, there's a lot of things up in the air with this fundamentally. What are your thoughts fundamentally and technically on the rate environment in the U.S. right now?
September, for me, September is probably the month where the Fed is going to start to raise rates. But it will depend on how inflation is behaving, they need inflation right now.
Right.
And if they're not getting inflation, they're not going to raise rates. So based on what they said in past meetings, I expect them to start raising rates by September.
Right. I think that's the tone of the general population out there. But to me, we've barely come off all-time highs. I mean, we're pretty. I don't know if these are all. I guess they are all-time highs, or recent all-time highs. Let's put it that way. And we've come down at a major inflection point, and we've held. That being said, what you just said, I fully am on board with what you just said. They're going to have to give some token, rate-raising event just to kind of shut some people up that they're just going to let this thing go forever, and they're going to pretty much put a stake in the ground that they're not going to let this go forever. But I think the market's probably saying that, just what I just said to themselves, that that's a probably token event, and they're going to be sitting on the trigger, waiting to do what they have to do, seemingly to take care of the U.S. stock market, and they're supposed to be taking care of the U.S. economy. You know what I mean? So
yes.
I'm still on a long-term basis, still bullish on treasuries, even if they've got a news story out there that they are going to, raise rates. But again, me and you just trade the profiles and the technicals,
right.
And an intermediate basis, we have broken down on the 10-year, but on the long-term, we're still hanging in there. And the cool thing is you can orient stops around this, and that's what we always talk about.
Like I tell my traders, the fundamental picture is basically where you are and where you want to be. That's the fundamental picture. And the tools are your GPS to get you there. Yep,
exactly. And Juan, you actually do a lot of educational events, and your prowess as a educator is second to none. What's some of the things you've got going on now? I know you've got some proprietary traders and all that, but what do you have on the agenda moving forward? Do you have some new things that you're kicking off?
Yeah, sure. We're constantly training traders for hedge funds, institutional investors, pension funds, brokers, and all that in Colombia, basically and mainly, but more and more moving to Mexico and starting a little by little with our courses, as you know, and our technology in the U.S. with you guys.
Gotcha. Yeah, I'm so happy we're getting ready to launch some things together in the U.S. because you are obviously good at what you do, and I think we're going to have a really good team effort on some of these things. I want to throw gold out. Is this a coin flip right now?
1,000 my target for gold. 1,000.
Okay. Gotcha. I know you said that before, and we've obviously been rattling around here. My personal feeling is, we had 1267 as a big number I'm showing right now. That kind of failed, and I got stopped out of this from the long side. And then we talked about 1234 recently, and that held for a little bit, for maybe, I don't know, $10 or $15 an ounce, and then we threw up there again. You're just feeling that with global market conditions, equities, all things considered, this thing is going to trail off?
if there's no inflation, you'll see gold at 1,000. If inflation starts to pick up and the Fed start raising rates, you're going to see 1,300 again.
Right. Oof. Okay. Here's the latest on gold. We had that 34.38 area, 1234.38 that had to kind of hold. That hasn't hold. If we get a Friday close below 1238, 1234, and it looks like we're sitting down here at 1228 real time right now, that's gonna be pretty damaging for the longs, and we're gonna really have to sit tight. And if you're looking at this from the long side, we're gonna have to wait for new information to appear, and that's not available right now, so we're gonna have to sit tight. We do have some hint of a possible new daily profile that might appear down here with this orange bar, but one, it's kind of broken down lately, obviously, and I hear you.
Trading outside the boxes, so is
right.
And it's going to be a vertical move. When you trade outside boxes, you see, if not, it's not a fail break of the box. But you could see a vertical move in that thing down,
right?
Probably to the 1100 area.
Yeah, on a short-term basis, there's obviously trading opportunities, but we're generally right now speaking about longer to intermediate-term views. And I'm not saying there's still not. These are 60-minute 240 views. I'm kind of flashing around to folks. And by the way, if I go into the scanner and I go into futures, and I mean, we can actually pick these inflection points up to try to pick battles around based on the scanner here. And where's gold? There it is right there. So you got the multi-time frame kind of view right here, and it's real-time level of the market, if you will. So, but
huge
right now,
spike in the past hour, though.
Yeah, see that. And it kind of got up into that 1230 and some change area and backed off. I think this is from a long-term play, this is kind of a sit tight and just kind of wait and see right now. If you're thinking about going long, you got to have some confirmations, and we just don't have those right now. And that means that more than likely, like Juan said, the leverage might be towards the short side right now. S&Ps, we got about a minute left before we get a break. You got any comments on this one?
S&Ps is buy the dips.
Yeah.
Still.
Yeah. As insane as that is.
We call the long Monday here.
Right.
In the room. It's time to go swing long S&Ps, spiders, diamonds, Qs.
Yeah.
You know why? Look at transports. Is already rallying. So and Russell. If you have Russell rallying, transports rallying, the tech sector, Apple, everyone's going nuts.
I'm looking at the Russell right now. Yeah, everything's elevating. And
look at the Russell in the monthly. We've been in a consolidating move for months. So we're breaking above that P formation on the monthly, and we're breaking up, that P. So that's another confirmation that this rally has legs. Still,
Juan, thanks for coming on today, man. I really appreciate it. I know you're busy down there. And we'll talk later today, but we're going to break, guys, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. A couple of questions earlier. Somebody was asking how many people are in the company, and every once in a while, like just to get, if you own a business or do anything really, I mean, I have to get things out of my head, and every once in a while I just take some serious notes and try to go over this, get it out of my head and kind of have it out to where I can kind of check off on things that are getting done. And I was writing down everybody's responsibilities the other day, and there's about 15 people that are internally doing checks and balances within this company. Also, was asking whether I like living in Chicago or North Carolina. At this stage of my life, I like North Carolina a lot. Obviously, like living in Asia too. Chicago served its purpose. I loved it when I was there. I was a little bit younger, and running around downtown and being in the loop, that probably wouldn't be as appealing to me at this stage. But Chicago's a great place. A lot of great people there. It's just one of the best cities in the world to me. So that's the scoop on that. I want to look at I wanted to get into a lot of stocks this morning. I'll try to keep those on the radar for tomorrow. I had a couple of questions about Facebook. My bottom line on Facebook is this: stops below 73.48 and stay long. That's it. I mean, this is a Goliath of a stock now. There's a lot of people in it, and Apple. Somebody was asking about this. Should they get out? technically speaking, we had the breakout and targets at 119.75 in the breakout. The close above, we crowded up in there, bust out. Again, I think you got to look at this with stops below 119.75 and just let this thing do what it's going to do. They got a massive amount of cash. Fundamentally speaking, there's a lot of good things on the table with this company, and some of those recent tidbits of details have really started having people question why the stock is actually this low. I mean, they could have $1 trillion in cash at some point. I mean, that is just literally insane. I mean, good. It's just astounding. Here's the NASDAQ. Talked about this was the kind of the relative strength trade relative to the S&Ps. We again had that 42.10 there that we could really leverage off of. Didn't even really bust down below there, and now we're doing a moonshot. And what do you do now? I think you got to wait. You got to. I mean, this long-term traders obviously can put some stops in, and those stops could be around now 42, 43, 42. That's the unfair highs that we're trying to close above this week. Today is Friday, and we may have a close above here, and that's going to, if we don't have a close above there, that's not going to be cool for longs, because we may have to wait a little bit. But again, all things considered, and looking at what we generally look at for the tide of the marketplace, as Basil coined it one day, which I love that term. Breadth is still positive on the S&Ps and the NASDAQ, and we've got a lot of automated systems that rely on this information, and historically it's been not spot on all the time, but very, very high probability chances to be correct. And here's the NASDAQ, and still we start seeing some red shoots, if you will, on the downside. It's not the time to get short any of these indexes right now, and we've been talking about that. So still taking that stance. Make sure you put your stops in there, folks. We got about 20 seconds left, and I think I've covered some of the questions that we had, but I didn't look at the 30-year, so let me jam that in. I had one question about that. 30-year support, new profile again, massive support between 145 and 144, basically that neighborhood. That's again the kind of back the truck up area for me on the 30-year. Obviously had that technical damage happen on the intermediate from 149, but again, that's what stops are for, and then regather ourselves at a little bit lower price for long considerations again. Guys, you've been great. Thanks very much. Go Bears. We'll be back Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.